Silver just dropped over 15% in a matter of weeks, and right now, thousands of retail investors are panic selling, dumping their physical silver, closing their positions, convinced the rally is dead. But here's what almost nobody is telling you. This pullback may be the single most important buying opportunity of the entire decade. Stay with me, because in the next 12 minutes, I'm going to show you exactly why, with the data, the charts, and the institutional moves that the mainstream financial press is completely ignoring. If you've been holding silver, or you've been watching it from the sidelines, the past few weeks have felt brutal. The spot price collapsed, social media filled with doom, and the so-called experts started calling the end of the silver rally. But this channel exists for one reason: to cut through the noise and give you the analysis that actually matters. Because what is happening in the silver market right now is not what it looks like on the surface. There are forces moving beneath this price action, institutional, geopolitical, and structural, that completely change the picture. By the end of this video, you will understand why silver dropped, what the smart money is actually doing, what the 3 most likely scenarios are for the rest of 2025 and into 2026, and why $150 silver is not a fantasy. It's a mathematical possibility that serious analysts are now openly discussing. Let's get into it. First, let's be honest about what caused this pullback, because most people are getting this completely wrong. The mainstream narrative is simple. The dollar got stronger, risk appetite fell, and silver sold off. End of story. But that is a dangerously shallow reading of the situation. Here's what actually happened. Number 1, COMEX paper selling. In the weeks leading up to this drop, speculative long positions in silver futures reached extremely elevated levels. When the market sensed those positions were overextended, the algorithms triggered a cascade of forced liquidations. This is not silver failing. This is paper silver derivatives doing exactly what they always do. It is mechanical. It is temporary. Number 2, the dollar short squeeze. The US dollar index staged a sharp, unexpected bounce. When the dollar rises quickly, commodity prices priced in dollars get hit mechanically. Again, this is a technical reaction, not a fundamental shift. Number 3, rate expectations. Federal Reserve speakers pushed back on early rate cut expectations. Markets repriced. Risk assets, including silver, pulled back. Now here's the critical point. None of these factors change silver's fundamental story. Not one. The supply deficit is still intact. Central bank demand is still rising. Industrial demand is accelerating. And the monetary debasement that is driving this entire precious metal cycle, it is getting worse, not better. The panic you're seeing right now, that's retail investors reacting to paper price moves, while institutions quietly accumulate physical metal at a discount. Now pay attention, because this changes everything. Silver is in the middle of a structural supply deficit that has persisted for 3 consecutive years. The Silver Institute, the most authoritative body tracking global silver supply and demand, has confirmed that global demand is outpacing mine supply by hundreds of millions of ounces annually. Let that sink in. We are consuming more silver than we are mining, every single year. Why? Because this is not your grandfather's silver market. Yes, silver has always been a monetary metal, a store of value, a hedge against inflation. But in 2025, silver is simultaneously one of the most critical industrial commodities on the planet: solar panels. Every single solar panel manufactured today uses silver paste in its photovoltaic cells. Global solar capacity is expanding at a pace that was unimaginable 5 years ago. The IEA projects that solar installations will continue to break records through 2030, and every gigawatt of capacity requires significant silver. Electric vehicles. EV adoption is accelerating across Europe and Asia. Each electric vehicle uses roughly double the silver of a traditional combustion engine vehicle for wiring, charging contacts, and onboard electronics. 5G infrastructure, semiconductors, medical devices, water purification systems. Silver is in all of it. But here's what the big banks don't want you to know, or at least what they won't say on television. Silver mining supply cannot respond quickly to rising demand. Opening a new silver mine takes 7 to 10 years from discovery to production. The pipeline of new projects is thin. And approximately 70% of all silver mined globally comes as a byproduct of copper, zinc, and lead mining, meaning silver supply is partly controlled by the economics of other metals entirely. This is a structural supply squeeze, and it is building quietly, relentlessly. Let's zoom out to the macro picture, because this is where the real story lives. The European Central Bank is in an impossible position. Inflation in the Eurozone remains sticky, not the 2% target that policymakers promised, but persistently elevated across energy, food, and services. At the same time, European economic growth is anemic. Germany, the engine of the European economy, has been in or near recession. This forces the ECB into a trap: raise rates further and choke what little growth remains, or pivot and risk reigniting inflation. Either path is bullish for silver. Either path represents a continuation of the currency debasement that has been eroding European purchasing power for years. And Europeans understand this instinctively. Wealth protection is not an abstract concept here, it is cultural memory. The generations that lived through Weimar hyperinflation, through post-war currency collapses, through the sovereign debt crises of 2010 and 2012, they know what happens when governments lose control of money. Meanwhile, look at what central banks globally are doing. Not what they're saying, what they're doing. Central bank gold buying hit multi-decade records in 2023 and 2024. And while the focus has been on gold, silver is the shadow trade. As gold's price rises and its premium over silver increases to historically extreme levels, what analysts call the gold to silver ratio sophisticated investors and institutions begin rotating into silver as the higher leverage play. Right now, the gold to silver ratio sits at levels that have historically preceded massive silver outperformance. Every time this ratio has been this stretched in 1980, in 2003, in 2011, and in 2020, silver subsequently exploded higher, dramatically outpacing gold's gains. History does not repeat exactly, but it rhymes with remarkable consistency. Let's talk about the charts for a moment, because the technical picture here is genuinely compelling. Silver's recent pullback has brought it back toward a critical support zone, a price level that has been tested multiple times and held firm. This is what technical analysts call a higher-low structure, and in trend analysis, higher lows within a broader uptrend are accumulation signals, not reversal signals. The RSI, the Relative Strength Index, has cooled from overbought territory and is now approaching levels that have historically marked strong entry points in silver's bull market cycles. Volume analysis tells the same story. The selling volume during this pullback has been declining, which tells us that the sellers are exhausted, not that new sellers are entering the market. Meanwhile, buying volume at these lower levels has been quietly increasing. Institutions do not announce their accumulation. They let price action and volume speak for them. If silver holds its current support zone, and the evidence strongly suggests it will, the technical setup points toward a significant move higher. The measured move targets from the breakout pattern that silver completed earlier this year point toward the $50, $60, and beyond price levels as the next significant resistance points on the path to triple digits. But here's the piece that changes the entire equation in 2026, the potential for a short squeeze on COMEX. The commercial short position in silver futures, held largely by the major banks, remains enormous relative to available physical inventory. If physical demand continues to draw down COMEX registered inventories, the conditions for a historic short squeeze become increasingly probable. We have seen many versions of this dynamic play out before. A full-scale squeeze would be unlike anything seen in modern markets. Let me give you the three scenarios I am watching for the rest of 2025 and into 2026. These are not guesses. These are structured probability assessments based on the data we've just walked through. Scenario 1, the base case. Gradual grind higher. Probability, roughly 50%. In this scenario, silver consolidates at current levels over the next 1 to 2 months, absorbs the remaining selling pressure, and then resumes its uptrend. The Fed begins cutting rates later in 2025. The dollar weakens. Industrial demand continues to outpace supply. Silver climbs methodically toward $45 to $55 by year-end 2025 and continues its advance into 2026. In this scenario, $100 silver arrives sometime in 2026 to 2027. Patient holders are rewarded. Scenario 2, the bull case accelerated breakout. Probability, roughly 30%. A geopolitical shock, a currency crisis perhaps in a European peripheral economy, or a sudden loss of confidence in the dollar triggers a flight to hard assets at scale. Combined with a COMEX inventory squeeze, silver breaks decisively above $50, the historic all-time high, and the breakout triggers a wave of mainstream financial media attention and FOMO-driven retail buying. In this scenario, silver reaches $80 to $100 before the end of 2025 and is approaching $150 by mid-2026. This sounds extreme. It is not without precedent. Silver moved over 150% in a single year in 2010 to 2011. Scenario 3, the bear case extended consolidation. Probability, roughly 20%. The Fed stays higher for longer than expected. Dollar strength persists. The global economy avoids a hard landing and risk appetite remains elevated. In this scenario, silver remains range-bound between $26 and $30 for another 6 to 12 months before fundamentals eventually reassert themselves. This is the scenario the bears are pricing in right now. And even in this scenario, silver's long-term trajectory toward $100 and beyond remains intact. The bull market is merely delayed, not defeated. The critical insight is this. In 2 of the 3 scenarios, silver is dramatically higher within 12 months. And in the 3rd scenario, the fundamentals are still building for an eventual explosive move. The question is not whether silver goes higher. The question is whether you are positioned when it does. Let me bring this together. Silver just experienced a sharp, painful pullback. Retail investors are panicking. Social media is full of fear. And underneath all of that noise, the fundamentals are screaming the same message they have been screaming for 3 years. We are in a structural silver deficit. Demand is accelerating. Supply cannot respond. Currencies are being debased, and the smart money is accumulating. The panic you are seeing is the price of admission. Every major bull market in silver's history has included brutal corrections that shook out weak hands right before the next, larger leg higher. The people who sold silver at $15 in March 2020 watched it reach $30 within 6 months. The people who panic sold in 2010 missed a 175% rally. Are there risks? Absolutely. There always are. If you're investing, invest only what you can afford to hold through volatility. Diversify. Do your own research. But if you are a long-term holder of physical silver, or if you have been waiting for the right entry point, the data suggests you may be looking at one of the best opportunities this market has offered in years. $150 silver in 2026 is not a meme. It is a scenario with real data-driven support, and the window to position before that move is not infinite. If this analysis gave you clarity in a market full of confusion, give this video a thumbs up. It tells the algorithm that this content is worth sharing with more people who need it. Subscribe and turn on notifications, because when the next major silver move begins, you will want to be the first to know. And drop a comment below. Are you buying this dip, holding, or waiting? Type silver if you're staying the course. Type watching if you're on the sidelines. I read every comment. This is one of those moments the market gives you. Rarely the question is whether you'll recognize it when it's here.